Welcome back to Healthcare Consumerism Radio. This is Brent Macy, Managing Director of the Institute for Healthcare Consumerism, along with CEO and founder Doug Field. And joining us today on the program for this segment is Jeff Caldwell. Jeff is the Marketing Director for the Employee Benefits Division of Transamerica Employee Benefits. Jeff, welcome to the program.
Good morning, Doug. Good morning, Brent. How are you guys?
Hey, we're good. Ready for the weekend. What about you?
I heard that. I'm always ready for the weekend.
Yeah. Well, I appreciate you having you on the show, Jeff. Kind of give our audience kind of a brief overview of Transamerica Employee Benefits, and we'll dig a little deeper.
You bet. Transamerica Employee Benefits is really the division of Transamerica Life Insurance, which has been providing life insurance for over 100 years. We've been doing voluntary benefits for just over 80, and voluntary benefits, obviously, the employer contributed or fully employee-paid payroll-deducted life insurance products such as universal life, whole life, and then the supplemental health side, hospital indemnity, cancer, critical illness, accident, short-term disability products. And we have, like I said, we have a very large portfolio of products that we offer and distribute through independent producers, consultants, and our benefit communication specialists.
Now, Jeff, what are you kind of seeing out there, in the voluntary benefits world? What's moving? What's the trends? What are you seeing out in the market?
The great news is that voluntary benefits is experiencing a big boom right now.
Yeah.
You look at either LIMRA's numbers that say voluntary benefits grew 9%, or Eastbridge's numbers that say it grew 6% or so, anywhere from $4 billion to $6.6 billion of premium brought in last year. And we're actually in a position where we're riding that wave. We've had 3 years of double-digit growth here at Transamerica Employee Benefits, and I think there's several reasons behind that.
Yeah. Jeff, coming out of our conference in May, there was a lot of talk about supplemental and voluntary and life around the increased adoption of true healthcare consumerism programs, whether it's full replacement programs being put in, whether it's companies moving to defined contribution and exchanges. And, do you see those two aspects as two key drivers to where you're seeing the growth?
Well, I think as you see employers redefining their benefit strategies, I think a lot of them are doing full replacements. Numbers show that rollover coverage is increasing. I think we're up to 50% from the last survey I think I saw. And, as we're moving to these exchanges, whether private exchanges or company-sponsored exchanges, you're seeing a lot more increase as employers are looking for different solutions to engage their employees. One of the things that, as voluntary benefits has really evolutionized, is you're seeing legacy-type products or older generation products being replaced by newer generation products. I'll give you a good example. A critical illness plan 4 or 5 years ago, maybe even 7 years ago, maybe only offered one lump sum benefit, and the policy was done. Now you're looking at critical illness plans where there's no categories, no lifetime benefit, offering some wellness components. And so I think you're seeing employers evaluate their major medical coverage and then really look at a carrier's plan design and say, hey, does this now make sense now that we've gone from a $500 deductible to a $2,500 deductible?
Yeah. Now, Jeff, when we've got healthcare reform that all of the whole country went through, we as an industry went through. What are the opportunities that have presented itself to employers and/or brokers, carriers that you partner with to take your solutions out to the market?
The good news for benefit advisors today, and I'll start with them first, but is that they're not too late. The time to really sell these products is now. And the impact of healthcare reform allows the voluntary products to sort of change their game, and whether it's overcoming the healthcare challenges, or it's simply whether that's through offering compliant supplemental products, whether it's packaging voluntary benefits to offset the deductibles, looking at flexible plan designs from that standpoint. But you also have an opportunity for benefit advisors to really weave in voluntary benefit solutions as ways to migrate the out-of-pocket exposures to these increasing deductibles.
Right.
And I really think offering these offerings are something an employer wants to do, but they don't always get implemented from a resource standpoint.
So if an employer is out there and say they do have that high deductible, your discussion with them is hey, our products are going to come in and fill gaps in care that are created by that high deductible that you put in place. Is that the angle?
Yeah, I think that's a very great position for a broker to position voluntary benefits. But, it's really employers are looking for just more than that solution. I think they're looking to drive down utilization. I think they're looking to reduce the physician office visits. It's not just the deductible that they're worrying about, but it's the increased co-payments. Yep. It's the increased cost share. And I think, high deductibles and rising premiums will continue. I think what voluntary benefits can help do is provide some rate stabilization while giving the employees resources to really defray these out-of-pocket expenses.
Now, and you had mentioned it earlier in the segment here, and I want to get to what employees are looking for in voluntary benefits, but I wanted to kind of touch on these private exchanges. I mean, from our seat, we're seeing new private exchanges launch weekly out there.
Sure.
I mean, are you looking to embed your solutions in these what are essentially just distribution platforms for benefits to an extent?
We are. We have a dedicated team that's really focused on evaluating. Well, first of all, you got to identify and kind of sort of prioritize these key exchanges.
Right.
You're right. It seems like they're growing, and as a carrier, we do have a finite number of resources, and so as we identify them and prioritize them, then we really have to determine the technology interface requirements that are going to be involved in that.
That's a good point.
So it's not simply just a conversation about, hey, we want to partner with you. Now it's so how do we get the technology to work, and whether that's single sign-ons and iframes and data file requirements, and we have to do that with each exchange. So there's resources that have to be really deployed to do all that. And really, the third part of that is evaluating the product strategy. First of all, you want to make sure exchanges have a good grasp on the major medical side because that was their key focus. And as they bring on voluntary benefits, it's another product discussion. Do you put 6 products, or do you start out with maybe a critical illness or an accident, or maybe a cancer plan?
There was on the other side of the house, we were actually having a discussion with someone at Benefit Selling who has the the platform in the private exchange, and the one thing I asked him was about the voluntary piece, and what he said is I can't put every voluntary benefit company in my platform because I got to be able to feed the mouse of those carriers that I put in. Is that kind of what you're hearing too? Is that they're kind of jockeying with how many people they put in?
Well, I think that's part of the solution is that they have a finite number of resources. There is, if you look at just the top 10 voluntary benefit carriers out there, if they go after each one of those, they're going to have some challenges that are created by trying to put that many products. And honestly, as a carrier, we want to be the preferred selection. If it's an employer-driven exchange, and employees are just deciding between health care or different major medical plans, we'd like to be the sole provider of voluntary benefits in an ideal world.
Now, the employees out there, what are the employees saying? What are you seeing? What they're migrating to?
Well, we recently did kind of a consumer study of what employees were saying about voluntary benefits, and as you look at the different types of products, critical illness and accident tend to be the hot topics in today's voluntary benefit world. But as minimum essential coverage, minimum essential plans are coming on board, you're seeing a lot of migration toward hospital indemnity policies. You're seeing kind of a revival in that type of policy as sort of a gap filler. And then, of course, you've got your gap plan that we've seen a huge increase year over year, and really just supplementing the medical expenses from co-payments, co-insurance, and deductibles. But then again, your traditional life insurance, short-term disability, accident plans are really still a major share of the voluntary benefit space.
Well, Jeff, kind of swinging back and forth about the private exchanges, the projection is that private exchanges could have as many as 40 million lives, within the next 2 to 3 years. And life and short-term and long-term disability appear to fare very well in the current projections, going forward.
And really, when you look at it as an employer strategy, those are really the three key products we really push first. I mean, life insurance, LIMRA says, is at an all-time low. You go back back to 1960, where 72% owned it. Go fast forward to 1992, where only 70% owned it, or 55% owned it, and now in 2010, 44% own life insurance. So as those numbers decrease, there's a huge need for it. And I think as you look at the different generations, how we use that messaging is crucial. And I know you guys have had some guests on there talking about the need and the critical timing of communications, but it's even more important in the voluntary benefits world.
Yeah. Hey, Jeff, we've got about 30 seconds left. Time flies when we're having fun here, and enjoyed having you on the program. Give our audience, a final thought or two, if you would, please.
As I would say, as the Affordable Care Act continues to alter the landscape of health care coverage, I think you're going to see employees increasingly craving voluntary benefits. I think it's important for brokers, consultants, producers to really partner with a carrier that offers flexibility in product designs to meet the employer's major medical coverage needs, and really try to make it seamless and simple for employees to sign up. And technology, as you guys have talked about in the past, is really critical in delivering the message as well as the enrollment solution.
Thank you, Jeff. Listen, enjoy your weekend out in Arkansas. We'll have you on again sometime in the near term. And to the rest of our audience, appreciate you joining us today, and see you next week at 11 o'clock on Healthcare Consumerism Radio.